Let's take a closer look now at where things stand. The UK has voted to leave the European Union. The pound, as we mentioned, has plummeted in anticipation. The majority of voting areas have been declared. Now, and the Vote Leave campaign is out in front with 52% of the ballots counted, while the Remain campaign is on 48%. The Leave campaign leads by more than 800,000 votes. In all, it has more than 14 million votes, whereas the Remain campaign has just over 13.9 million votes. Now, the turnout in the referendum was just over 70%. Official numbers put it at 72%. 16.8, that's the magic number. Votes are needed to win the referendum. And in anticipation of the UK leaving the EU, the British pound, has tumbled to 31-year lows, falling by over 9% in financial market. All right, let's take a check how the Brexit effects are affecting the markets in Asia. Pamela Ambler is in Hong Kong, and she now joins us live. Pamela, global investors are watching the results very, very closely, and markets are responding with lots of movement into safe haven assets. This is not what the markets expected. From where the picture as it stands now, how's it looking in the Asian equity and currency markets?
Yeah, well, the Asian markets were the first to open trade while the results were coming out. And this morning, the markets took a hammering. The volatility reached the highest level since the financial crisis in 2009. Now, here we right now are at a lunch break, and the morning trading session ended down 4.6% lower. Basically, what had happened was the early opinion polls had given the Remain camp favor, but because that led to complacency perhaps in the markets. And this morning when the early poll results came out giving the exits, the vote, markets reacted very volatile. The yen and the gold, the safe haven assets, that we saw a rally there. We're not talking about 0.25% or 1% rise in the yen. We're talking about 2 to 3% rise against all other major currencies. Also, the top-rated government bonds, we're seeing a lot of investments and money going in there as well. Aside from gold, all other energy and commodity stocks, Brent, crude, all trading lower. So as of right now, the picture stands, it's still changing very rapidly.
I think the name of the game right now is risk aversion. So put this into context for us for businesses.
Right. Well, businesses, of course, they did not want an exit. They wanted to remain. That would mean less uncertainty for the business. And as you mentioned, the sterling is very sensitive to this result, and they hit a 31-year low. There's two reasons for that. One is because an interest rate is expected to move in the case of a Brexit. The second one is because UK will now be viewed as a riskier prospect. There will be a higher premium associated with the investments in the country. Economists are estimating that the GDP could slow as much as 3% less. The vote, though, doesn't mean that the UK will leave tonight. Of course, there is the negotiating of the terms of the exit, so businesses will be watching that very, very closely. The longer-term impact over the medium term, perhaps inflation, and we're talking about nominal wage growth, and even the move, of course, in energy prices. Here on the Hang Seng Index heavyweights, HSBC, Standard Chartered, the banks that have exposure to Europe are seeing a major fall. The HSBC was down by 10% before the lunch break.
All right, Pamela Ambler live for us in Hong Kong, giving us reaction of the financial markets as they're the first ones to open, reacting to this Brexit vote.